So this single word which defines Ambit funds is consistency. We believe that consistency is the unique proposition which Ambit fund brings to its investors. What we are trying to debunk here is removing the halo from the fund manager. Generally, people have this perception that fund manager knows it all. Fund manager knows when to buy. Fund manager knows when to sell. Fund manager knows when to pick up the stock, when to sell, when to do every kind of a portfolio activity. Only the fund manager knows. Ultimately, how much a person can know and how much the person can execute. Hence, for all our funds, for Ambit funds, we have done a very simple construct. 3 steps. Look at the past, look at the present, look at the future. The robotic algorithm helps us draw the playground for all the Ambit funds in which the fund manager can play. The fund manager cannot, even if he sees some bright spots, cannot go out of the playground. He has to score the goal within the playground. Second step is present. We go deeper into each and every portfolio stock which we buy and hold. And the reason why we go deeper is we believe quantitative only formulates one part of the research. Is the qualitative research, like meeting the wholesaler, retailers, customers, ex-employees, independent board members, brings us closer to the reality. I am saying closer to the reality, not the reality, so that we understand how these great companies for investments are built. And if we are able to identify their pattern over longer periods of time, we will be able to make money out of them. The third is we try and find their future, but future is uncertain. Future is unpredictable. What do? We look at the capability. How many times the similar companies or the same company has gone through the disruptions in the past? Have they withheld those disruptions which have impacted them and have come out even stronger from those disruptions? If yes, they will be able to ensure that these disruptions do not impact them in future. Very important theme which plays for Ambit funds is no churn. We don't churn. We want to hold these companies forever because we believe that these companies have a consistent track record of growing year after year. With Ambit funds, we don't want to hit sixes. We want to constantly play test cricket. We want to hit every ball, not necessarily score on every ball, but ensure that we are sticking on the crease and scoring runs with consistency. If any sixes or fours come on the way, they are always welcome. But here we are not trying to play T20. We want clients should make money over longer periods of time, but with least amount of volatility. The right time to invest in Ambit funds is always. And the reason why I say always is Ambit funds do not receive their core strength or core competency from political linkages, from crony capitalism, from related party transactions, or because of a great CEO. The DNA of the portfolio companies which Ambit fund holds is so strong, is so robust that it is able to generate profits year after year with consistency. And for us, we simplify investments. Investments means equity appreciation or capital appreciation, and that comes from the simple fact stock prices are a derivative of earnings per share. If you are able to generate earnings consistently without fail, year after year after year after year, whether it is 2008 Great Recession, or it was a dot-com bubble of 2000, or it was 2013 when there were headwinds in the economy, or there was 97 Asian crisis, these companies demonstrated continuous PAT growth, continuous revenue growth, and maintaining those ROCEs. If that has to happen, the stock prices will emulate. If you remain invested over long periods of time, you are definitely gonna make money. Hence, your investment horizon should be longer rather than you investing by timing the market, by predicting the outcome. So remember, folks, one very, very important thing. A lot of you may be able to give the prediction on the event, but you can never predict the reaction of the market. Market is bigger than any one of us. Hence, don't try and predict the reaction of the market.